Hi everyone, welcome to another episode of The Naive Investor. With the recent drops across the indices, especially for tech stocks, the question on everyone's mind is this a good time to buy? Today we'll be looking at the contentious Tesla and see if it stacks up. It is general knowledge that Tesla is an electric vehicle company, but according to its SEC 10K filing, Tesla actually operates in two distinct but complementary segments, automotive and energy generation and storage. The automotive side is pretty much talked to death by the media, and talking further about it would be the equivalent of prodding a dead horse. So in this video, we want to shed light on an aspect of Tesla that the public doesn't often get to see. The majority of this video will be talking about Tesla's energy generation and storage operation. And what is happening at the moment is actually very exciting. In fact, the progress and development in this segment will be beneficial for the automotive side since electric vehicles need batteries. At the end of the video, we hope to shift your perception of Tesla as an electric vehicle company to more of a battery company and more broadly a technology company. Currently, Tesla has a few different vehicles available to consumers. They include the Model 3, Model Y, Model S, and Model X. There is also the infamous Cybertruck and the new Tesla Roadster and the Tesla Semi. The development and production of these vehicles are leveraging their proprietary technologies, notably the full self-driving technology, over-the-air software updates, and battery cell technologies. As the full self-driving technology matures, Tesla aims to establish a network of ride-hailing transportation service. So in the future, when you need to hail a ride home after a rowdy party or a particularly eventful sleepover, you won't need to worry about the driver's judgmental gaze. Besides their electric vehicles, Tesla has consumer-ready energy generation and storage products such as the Powerwall, Powerpack, and Megapack. These are their lithium-ion battery energy storage products integrated with inverters and control technology. The Powerwall is aimed for home and small commercial facility users, while the Powerpack and the Megapack are for bigger commercial, industrial, utility, and energy generation customers. Due to the modular design, the Powerpack and Megapack can be grouped together to form larger installations that are capable of reaching gigawatt hours or greater. In fact, Hornsdale Power Reserve in Hornsdale, South Australia, is currently using Tesla's battery technology. The site is the world's first and biggest implementation of a large single battery. Not too shabby for a place that resembles scene backdrops from the movie The Hills Have Eyes. Besides manufacturing batteries, Tesla also developed software to dispatch and remotely control their energy storage system. Autobidder is Tesla's proprietary software that is both a trading platform and controlling platform. It is used to manage assets and optimize portfolios and is currently operational at the Hornsdale Power Reserve. To observers, the Hornsdale Power Reserve is a success as the technology provided by Tesla has addressed the reliability and stability issues associated with renewable energy. Despite being in a first world country, South Australia had a power grid system that resembled that of a third world country. Disregarding the slight hyperbole, it was pretty bad. In 2016 and 2017, South Australia experienced multiple statewide blackout events and load-shedding incidents. Since partnering up with Tesla and Hornsdale Power Reserve, the South Australian government has managed to reduce the likelihood of blackout events, made responses to frequency disturbances much faster, and introduces competition into the energy market, which drives down prices. This kind of success is becoming a case study for other states as well as other nations and pushes Tesla's name to the forefront of the renewable energy game. Tesla's commitment to support the world's transition to renewable energy is again evident with their solar roof product. This is basically a solar panel that also acts as a roof tile and can directly capture energy from the sun and store it in Tesla's battery products. It is not known whether Solar Roof is compatible with other battery units or only with Tesla's own, but we all know how multi-billion-dollar corporations love to make their products cross-compatible with third parties in order to improve the usability and customizability of their products and to cut costs for customers. In May 2020, Tesla applied for a license to supply electricity in the UK. This is a logical move and further proves that Tesla aims to be a dominant player in the renewable energy game. Nevertheless, they noted in the 10K filing that the market for energy storage products is highly competitive. The proposed competitive advantages revolve around price, energy density, and efficiency, along with strong brand recognition. Tesla wants to offer low-cost renewable energy and to make switching over from traditional utility companies as easy as possible. In 2014, Elon Musk expressed publicly that Tesla's solar energy and energy storage business would grow faster than electric vehicle business. His skeptics, however, warned people of taking his claims with a metric ton of salt. They believe that Elon Musk is prone to exaggeration and the energy segment of Tesla's business has had a rocky start. In saying so, there is definitely a global shift towards renewable energy, and it feels like Elon Musk has ambitions to tackle this space. As such, we feel that Tesla's next big solar-powered spotlight moment will come sooner or later. From our analysis, the recent drop in share price can be attributed to three main factors. Firstly, observers of the stock believe that Tesla is overvalued, and this is an overdue correction. At the peak of the pandemic in March 2020, Tesla's share price dropped to $58 per share, only to rise continuously to its peak of almost $900. This is an enormous 15-fold increase, so it is reasonable to see some correction. At the time of writing, Tesla retraced to its 61.8% Fibonacci level and rebounded from the support. Secondly, the retracement started on the 27th of January 2021, the exact date when they filed the 10K report. In the report, they outlined the impact the pandemic is having on their operations. These impacts include reduced operations at their electric vehicle facilities, shortfall in microchip supply due to increased demand in personal electronic products, delays in launching and ramping up of production, supply issues that prevent Tesla from managing cost of goods, and tempered growth of sales due to travel restrictions. In saying so, these factors are not specific to Tesla's business model, but rather the side effect of public health safety measures implemented to manage the pandemic. So we believe it is more reasonable to view the recent pullback as a market-wide event. This is even more evident when we look at the chart for Tesla with the Nasdaq index overlay on top. Both charts show a tandem in the price movements. Thirdly, with the rising yield of the 10-year Treasury bond and inflation expectations, tech stocks are getting hammered across the board as investors become more risk-off. Although an increase in interest rate to combat inflation can affect Tesla's earnings, we believe the long-term value that the company can bring to its customers remains strong. Although Tesla has two reportable segments of operation, they have a singular focus: to support the world transition to renewable energy through innovations in energy storage and generation technologies and their application in everyday life. Tesla electric vehicle operation is strategically used as a low-cost marketing ploy of one of the many applications of the advanced battery technology. It draws in interest and subsequently funding for the development of the core technology. Personally, I find the recent dip an opportunity to buy, as my aim is to hold on to the stock for a long time. And that is pretty much it for today's episode of The Naive Investor. If you enjoyed the video, please click the like button and don't forget to share and subscribe. It does take a long time to research and prepare for these videos, so it would mean the world to us to see your support for the channel. Please keep in mind that no video on this channel constitute professional financial advice and are purely of our own research and personal opinions. Please seek advice from your financial advisors. Before you leave, just want to know, how far away do you feel renewable energy is from mainstream adoption and why? Please leave your answers in the comment section below. We would love to read them. Thanks again for tuning in. We have other videos on the channel discussing and analyzing companies and markets, so please check them out. Until then, stay safe and keep looking for opportunities.